Hello, everyone. Thank you for joining. This is Gigi. I'm in downtown Atlanta, checking in for an IML Forex event. Our host is going to be Grant tonight, and our special guest is going to be Jon Fibonacci. I'm going to be muted out. I thank you for joining in, and I'm going to mute myself in the background.
All right, good evening, everybody. How are you? Thank you, Gigi. We want to thank Gigi for giving this opportunity to us. And tonight's special guest, as she mentioned, is going to be Jon Fibonacci. I'll be sharing a screen in just a moment, and when Jon comes on, we'll be handing the floor over to him. If you have any questions, let us know in chat. And I'll be keeping most of the people muted while he goes on because we want to catch everything. And be sure, everybody, to have your notebooks out and take as many notes as you can because Jon is going to drop a lot of nuggets, okay?
All right, so you can see my screen with my Trade House logo and the date on here?
Yes.
All right, awesome. All right, guys, welcome to this presentation that I'm doing. My name is Jon Fibonacci. Some of you already know who I am. You saw me about a month ago on Forex'nChill. For those of you who don't know who I am, that is me. My real name is Jonathan, all right, and Fibonacci is not my last name, of course. Fibonacci is an umbrella as far as, you know, the numbers go and how it's found in nature and all this and that. And then also I use it for Fibonacci retracements and extensions when looking into price action. So Fibonacci means a whole lot more than just a tool. Oh yeah. I'm gonna ask our host here if he could watch the chat for me because I'm gonna be having the presentation up, and I think it will be recorded. All right, so today is 8/23/2019. This is going to be a presentation from myself, a 9 Markets Live Trade House educator. All right, and you guys already have access to my Facebook link, and then also my Instagram, which is @JonFibonacci. It's not that difficult. All right. So I'm going to go over just a couple of different things today before we get into the live charts and before we get into the questions and things like that. So one of the many tools that I have that I like to use is Wycoff. All right. Now there's different setups and stuff for using Wycoff. There's accumulation, distribution, like markups, and a whole bunch of other stuff. And actually, at the end of the presentation, I'm going to drop the links to certain websites that will give you a whole lot more information than just what it is that I'm presenting here. But this is how I look at the markets in a way. All right, and of course I couple them with other things that I go over with my students and my special group, Trade House, and all this and that. All right, so Wycoff accumulation, all right, is going to look just like this. All right, so there's a few different things going on. All right, hopefully you can see my mouse here. So it's called the accumulation breakout, sorry, and markup. All right. Going from left to right, like we always do, you have your accumulation, all right, and then you have a spring and the breakout, all right. Now, what I'm focusing on today is just these three: the accumulation, the spring, and the breakout. Now, of course, there are plenty of trading opportunities on the throwback and all this and that, but just for the sake of saving a little bit of time, we're just going to be focusing on these three, all right. So you guys know that accumulation is pretty much just sideways movement, all right, consolidation or whatever you want to call it, all right. So we're going to be looking into that. On Euro USD, we're going to be taking a look at the 4-hour time frame and go from there. All right, so like I was saying, this is Euro USD on a 4-hour time frame. And this is, I don't know, probably a couple weeks, maybe a month worth of price action. So just looking at the last I can't gauge how many days this is, but we're pretty much just looking at this area right in here. Hopefully you can see my mouse. Around a little bit before the 19th, all right, to today. Okay, so what I want you to try and look at and see if there's any type of accumulation or the spring, the breakout and stuff like that. So I'm just going to give you about 20 seconds or so to look at it and see if you can try and find the Wycoff schematic accumulation in this chart. All right, so I'm probably going to give you about another 10 or 15 seconds or so, give you a little challenge. For those of you who use Wycoff, you might be able to spot this a little bit quickly. Some people might not even know what in the world is going on, but trust me, you will by the end of this presentation when I go to the next slide or so. All right. So do we have any questions in the chat right now so far? I mean, I know we're just getting started, but is there any questions at the moment?
Not yet. We had one person say they couldn't see, so hopefully they'll be refreshing or logging out, then logging back in. Perhaps that was the issue.
Oh, okay. Yeah, I hope that gets fixed. All right, so I'm going to go ahead and go over to the next slide. So this is kind of what I was referring to for the Wycoff schematic. So the black lines are on here are representing the accumulation, right? Moving from left to right. We have pretty much sideways movement. We have a low, a high, a low, and a high, all right, which is great. And then our spring, which is right here, is the run lower below the accumulation, all right? Now, again, I'm going to send you the link so you can read about this a little bit later, but pretty much the spring, which is the run lower, I usually, well, majority of the time, I don't look at this as a breakout. All right. I don't think price is going to break out and then just head lower to the downside. All right. That's not what it does. What it's doing, excuse me, this is a classic example of price manipulation. All right. Oh, we just ran up to 100 participants. Awesome. So basically, in the retail mindset, right? Retail sees this, and if price goes in one direction, you know, they'll trigger sell stops to try and catch lower movement. All right, but that's not always the case. The market will do this on purpose, all right, to trigger those sell stops and then take price in the opposite direction. Okay, that's classic market manipulation. All right, so I'm going to go over to the next slide, because now what we're going to do is look at a side-by-side comparison of the Wycoff accumulation breakout and markup on the right side, and then our chart, which is right here on the left side. So you can easily see the correlation between the price and this schematic, okay? Accumulation, spring, and of course with today, our breakout. Meaning price is, you know, blowing out these highs, maybe heading for another high. Okay, so it's literally straight by the book. All right. Now, again, this was Friday, so I don't expect to see like a throwback or anything like that today. Probably not Sunday either. Fridays and Sundays are just not my favorite trading days, especially Sundays, just because there's really low volatility and things like that. So volatility usually doesn't pick up until Tuesday. All right, so that is that. But I just wanted to show you how by the book this week was for Euro, or the last couple of weeks was for Euro. All right. So you guys know me as Jon Fibonacci, right? It's obvious. I do use the Fibonacci extensions, but to be honest, it's kind of rare because there are other tools that are better than the extensions. So more often are going to be your Fibonacci retracements. Now, I'm not going to go over the 50% level today. I'm not going to go over the 61.8 level today either. What I'm actually going to do is go over the deeper retracements. So my two favorite deeper retracements are going to be the 786, right? 78.6 and the 88.6 levels. It's really easy to remember, right? 786, 886. All right, it's very simple. So Fibonacci is drawn either from a swing high to a swing low, or a swing low to a swing high. Now, what I'm going to do is continue with our euro example. All right. So from moving left to right, we created a swing low and then a swing high, and we were getting a retracement lower. All right. So this is kind of what I envision for myself, is price coming lower, right, with the red line, declining down to the 786 level, which is right here. All right, I know the picture, the numbers might be kind of small to see. All right, but trust me, it's right there, okay? And I expect price to go higher from there. All right, and then actually this slide is just the same thing, but for the 88.6 level. And depending on the range of the swing low to swing high, generally these two levels will be somewhat close together. All right, the smaller the range, the closer these will be together. All right, but if you were to ask me which one is better, just from my own experience, my own knowledge, and all this and that, the 786 is going to be far more popular than the 88.6. The 88.6 is very rare. It does happen, but just not anywhere nearly as often. All right. So anyway, let us continue. So here's the same chart that I was talking about on euro. Now, on the bigger time frame, on the bigger picture, we are trading inside of a range, right? Because this is where price is at. Our Wycoff schematic is here, but we still have this low that was created right at the beginning of August. And then around the 5th or the 6th, we created a high. Okay, so our Fibonacci is going to be drawn from our swing low up to our swing high. All right, and I'll do some more examples if we have time once the presentation is over. But here is the Fibonacci tool drawn with the levels. And if my memory is correct, I should have some arrows coming up here in just a second. All right, awesome. So at first, the 786 level gets hit and we get a reaction from that, which is pretty good, right? But now all of a sudden price starts to move sideways, okay? Because we don't see the Wycoff schematic yet, right? Because going left to right, we can't see what's 3 or 4 days out in advance, all right? So had we taken a trade here at the 786 level, we might have been profitable a little bit. We might have got stopped out at break even, or if we just held on to it, the trade really wasn't doing a whole lot, okay? So if you take a trade from the 786 level or whatever Fibonacci you're trying to trade, and you don't get the reaction that you were expecting, then most likely the analysis was wrong, right? And either it'll go to another Fibonacci level, or you're just wrong straight up and something completely else is going to happen. All right. So once the Wycoff schematic pretty much pans out, right, we start to see that with consolidation. Once we get the spring is what they call it, it heads lower, right? That false breakout to the downside. Notice how it hits right there down to the pip of the 88.6 level. All right. And on TradingView, you have the option to post the levels and the prices versus having to try and look at it. So based on this perspective, you can see that the 88.6 level comes in at 1.1052. All right. So if you want to check your charts and see if your MT4 actually went to 1052. It kind of depends because some brokers have different feeds and things like that. So when you get into like precise price, Sometimes you might not see this. It might go a little bit lower, or on your charts might have it a little bit higher. All right, there's going to be some type of variance, and that's just because different brokers have different feeds. All right, and that's just how it is. All right. But I just want to show you an example of why I would take a trade off the 88.6 level. Not just because it's a Fibonacci level, but because it's that on top of the fact that we have a Wycoff schematic. All right. And I want to say, okay, yeah, we're at the end of it. Here are the internet sources credited, and I'll copy and paste these in the chat so you can see. But if you didn't see already on the Wycoff schematic, it says that this came from stockcharts.com, and this is the exact link to it, and it's got plenty of more information on Wycoff analysis. And then the Fibonacci, right, you can actually learn from pretty much all over the internet, but I like the article that was put out on Investopedia, so I've got that link for you as well. And I'll put those out, and you can do your own homework on that. So what I'm actually going to do right now is just ask you to check the chat really quick, and then I'll go into either some questions or go into more charts for more examples on Fibonacci and Wycoff or whatever. All right. So while I'm doing that, if you could just check the chat for me and see what people are saying.
All right, they were asking which pair that was, but we were letting them know that it's a Euro USD that you were talking about.
Yeah, gotcha. Yeah, that was Euro USD on a 4-hour. So if you check the chat, I just posted the Investopedia one for your Fibonacci, and then here is the link.
Investopedia is a great site, people, if you want to learn some stuff.
Yes, it is. They've got a lot of things on there. All right, so there you have those two. All right, so if you can still see my screen here, this is the link to the Wycoff stuff. You can read all of this and check out these other charts. And I believe they have like a voice thing too, so you can like listen to it or whatever. I'm not sure. I haven't actually been through all of this, but just from a personal standpoint, this is my favorite. And then obviously this is going to be your opposite, your accumulation to go higher and your distribution to go lower. All right. So you'll pretty much see this, but opposite for bearish scenarios. All right. So just give me 1 second here. Got all of that. All right. So this is the chart that I was talking about earlier before we got started. The last time I was on ForexNChill, we were trading above 3,000. All right, so you can see, I can't remember what date it was. It was somewhere up in here. And I told you guys that I would expect for the monthly to close below 3,000. I might have been wrong at that point. August might have closed close, or July, I can't remember. But shortly after, right at the beginning of August is when we got our really nasty drop off. All right. And, you know, there was tweets and all that type of stuff in here as well to help drive the market lower, which is not good for, you know, like 401ks and stuff like that. But this is just kind of a follow-up of the very first one I did for you guys. I was going to ask, was that a bearish accumulation at the top on Euro USD? Let's take a look, because I don't know. We were looking at this right in here. It kind of was. I believe the individual that asked that question was this a schematic? In a way, it kind of was. When you get sideways movement, what I want you to do, and you can do this, you can back test this as well. When you see sideways movement, what I want you to do is take your trend line, all right? And of course, we're not going to draw trend lines. I would never do that. Just take small horizontal lines and just draw them from like the highs and the lows, and you'll start to see classic examples of market manipulation. All right, I'll just show you a couple examples right in here. So just give me a second while I dress this chart up a little bit. All right. Oops. Here we have that. And we have one more. About right here. I'll stretch that out as well. All right, so what I'm trying to hint at here is pretty much what I deem market manipulation. I'll actually write that down for you, because some of you that are on the PC or am I presenting in your living room, I've seen that too. What was I typing? Oh yeah. Okay, what I'm looking for is market manipulation. All right, so what I want you to study is the fact that price will break a new high or break a new low and then come back into consolidation. Okay, so the idea is that, you know, there are stop losses or buy stops, sell stops, and things like that. So if you can remember back into your own trading, you know, I want to ask you, how many times has this happened to you where you get stopped out and then your trade still would have been in profit? Like, you got stopped out, but then price still went your direction. You know what I'm saying? And I'm pretty sure that's happened to 100% of the people in here. All right. Unless you're like really, really brand new. Because the retail world, right, has taught that you should put your stop loss either close to or above like a high or a low. All right. And that's why you see, let me take this away because we didn't get one here. But notice that the lines that I've annotated for you, you got to run here above that high, and then the market comes lower. That makes a low, then it makes a high. That low here and that low here both get taken out from that candle right in there. And then where does it go to after it takes out traders here? It goes higher. It takes out stop losses resting above this high, right here. And then what does that do? It comes right back down into consolidation again. So these are prime examples of market manipulation, and they're doing that on purpose. The market literally moves to take your stop loss. All right, if you've heard anything different, I don't know what other people say, what else is online. I don't know, because I don't really pay attention to all that other stuff. But this is what I know. All right, the market wants your stop loss, and that's it. All right, because going back to the very basics, the very beginning of what the market is, right? The marketplace is a meeting of buyers and sellers, right? So if you're selling, because say you bought, you're selling your position away for your stop loss, right? So banks, institutions, smart money, whatever you want to call it, they're taking the other side of your trade, or your broker might be taking the other side of the trade as well. If you're with an overseas broker, okay, that would be like B-booking, okay, which is an illegal practice here in the U.S. And that's why the U.S. is so heavily regulated anyway, all right? But yes, so if you don't know, now you know. The markets are heavily manipulated, all right? Now, my trading, my own personal strategy, this is what part of that comes into. If I expect, say, bullish pricing on euro for whatever reason, if I see it breaking a low, I might want to be buying that new low, because I know that it could just be a potential run on stops to go higher, right? And a lot of the trades that I post and our students have been posting inside the trade house, you know, they've been catching lows or shorting highs because of this, of what we're doing. All right. So the Wycoff schematic is no different. Okay, going back to the accumulation, right? We had some lows in here. We had some highs right in here. Now in this scenario, it runs lower first. That's just how it is. It went lower first. So imagine the stop losses that were resting under these lows, right? I'll make this red. Because think about it. I'm just going to draw like random lines because there's no like specific area that it's going to go to. You might have stop losses resting right here. You might have some a little bit lower or a little bit lower than that, or even like way down here. It just kind of depends. But just know that there's going to be a majority of orders here. So the market comes down to take it and then jams higher. All right. And it does the same thing everywhere. If you've ever seen like something like this, you have casual price action, and then all of a sudden you get a movement like this, where it just whipsaws to the downside, whipsaws to the upside. Okay, that's the market trying to get people out. They're trying to trigger buy stops. They're trying to trigger sell stops. They're trying to trigger your stop loss going long or going short, whatever the case is. There's orders all over the place resting outside of the market. Okay, candlesticks only show filled price, right? When a buyer and a seller meet here, that candle is going to go there to show you that there was buyers and sellers here, and there was buyers and sellers here. All right. So if you have movement like this and there's no type of news, right? Like there's just no level 3 news and it's just casual price action. That's what this is. Market manipulation. All right. And oftentimes highs and lows will be swept. All right. And that's what I'm trying to tell you. I want you to go back into your own charts and just mark up highs and lows. That's all I want you to do. Mark up highs, mark up lows, mark up every single one. Now, obviously not every single one will be taken. Let me just show you 2 examples that I can eyeball really quick. You see this long uptrend in here, right? That should be pretty clear and obvious. It's just a straight up uptrend. Now we have a couple different lows, but this one right in here is very distinctive. This one right here, it's very obvious, right? The only other major low is over here and maybe right in here. So for everyone who got in long, or I would say the majority, right? The majority of people who went long and are still trying to ride the wave, where they're going to place their stop. In the retail mindset, the retail world has been taught to place your stop below that low, right? So what does the market do? There's resting orders here. Well, guess what? The market comes down. It triggers those stops, triggers those sell stops, whatever the case is, and then jams higher. Okay? The market does that on purpose. One more example. You have a short-term high right in here. That gets taken right there. I know it's hard to see. It's barely, but it's still. Okay? What does the market do after that? It goes lower. All right? Classic market manipulation. I could do this all day. You can go back into your own charts and start looking at highs and lows and see which ones get swept and which ones don't. Look at the obvious ones. All right? And just check the chat real quick. Oh man, you guys are all over the chat. Just give me 1 second. I'm gonna just take a look at this. So you don't draw trend lines? No, I don't. Trend lines don't work. Trend lines don't move billions of dollars in currency. Happened to me numerous times. Yeah. How did I know that? Will.i.am? How did I know that? The marketplace is a meeting of buyers and sellers. Yes, it is. What broker do you use? I see it all the time. I actually use Forex.com, and I only do that because of the World Cup trading championships. How to set up the fibs? Yeah, I can do that. So the way you trade helps avoid market manipulation. Nothing that I can do will prevent market manipulation. That's always going to happen. That's always going to be around. Okay, so quick lesson on Fibonacci. It's either drawn one of two ways. It's either drawn from a high to a low or low to a high. That's it. There's no other way to do it. High to low or low to high. Okay, so let me just do this real quick then. When we draw from a low to a high, what we expect is this. Low to high, retracement lower, continuation up. You got me? If we draw the other way, from a high to a low, what we expect is from a high to our low, a retracement higher, and then a continuation lower. Now, I do call myself Fibonacci, but I don't take it just because of a 786. There's going to be some type of clues that are on this side of the price action that I want to be looking at. Or like say we have something like this, price action like this, and we have like a high, right? If that high gets taken, just like I explained to you about how, you know, stops are resting up here. So if there's a short-term high, it gets taken and a 786 level, well, there you go. You know, that's a trade you probably want to take. So, you know, we only have a certain amount of time here together on this call. So what I'm telling you to do is go back into your charts and just start marking it up. Start looking at, just start drawing Fibonacci's all over the place. Just draw them everywhere. Correctly, of course. Major low up to a major high. That low got swept and it hit a 61.8 level. There you go. I mean, just draw them everywhere. High to low. We get a retracement to the 50 level. Nothing really happens. Maybe no trade taken. No big deal. All right. Fibonacci from a high down to a low. Look at this. We have a high right in here that gets swept. And it hits a 61.8 level. What does it do? Price trades lower. Easy. All right. A lot of the studying that I do, this is what I do. I just go back and back and back into the charts. Okay. Look at here. Here's another example. You have a high. You have a low. You have a distinctive high or two highs right in here. Drag that over. Stops are going to be resting here. What does the market do? It comes up here, grabs your stop, hits that 786 level for the razzle dazzle, and then price trades lower. Okay? Can you see that? Can you see the same thing happening over and over again? I know I do. I mean, it's really not that difficult. Okay, maybe you have one right here. Kinda. Not the most sexiest setup. Fibonacci from a high down to a distinctive low. You have some highs that where you have a high created here, creates one more, and then it heads higher, blows out these two highs. It almost gets to the 786, and then it drops off. All right, so maybe that setup didn't work. Maybe we didn't get into a trade. Congratulations, nothing's perfect, okay? Look at this. Look at this right in here. This was July of 2017. You have a distinctive low up to a distinctive high. Check this out. You have 3 lows right in here, maybe 4 lows right in here, okay? That gets taken right here. 61.8 level, continues higher, right? Low to high, comes down to take stops, and 61.8 level for the continuation higher. Those are good trading opportunities. Now, what I like to do, let me put this back up here. Okay, once you have a scenario, right, and you say, all right, I want to take a trade. Where am I going to place my stop? Well, if your long-term directional bias is long, okay, what I like to do is place my entry at the lows, excuse me, minus a couple pips. So it could be 5, it could be 10. That really depends on the range, and there's a whole bunch of other stuff to look at as well. So let's just say, you know, you add a couple pips to those lows. All right. I don't even know how many. I mean, this is all hindsight. I could tell you whatever you want to hear. 9 pips lower. All right. So we'll just say 5 then. Right. 5 pips lower. And say we just place our stop at the 786 level because we're bullish. So we don't think price is going to go all the way down there. Okay. Here's your risk to reward. You target a new high, right? There's your stop. There's your take profit. That's a risk to reward of 1 to 5. All right. So that's good risk management. You're risking $1 to make $5 or whatever the case is. I'm risking 100 to make 500 or 1,000 to make 5,000, whatever the case is. I don't know your account size or whatever, but you get the picture. Okay. And that's kind of how I go about placing my trades when using it with Fibonacci is what I mean. And not every trade will work. Okay. Let's take a look at this, for example. You have a major low to a pretty distinctive high right in here. Price comes lower. You expect the gap to get filled. Well, guess what? It doesn't get filled. It just goes higher. So maybe we missed another trade here. Congratulations. Nothing's perfect. All right. Nothing is going to be 100%. All right. And I would never tell you that. Let me just check the chat really quick. No, I use Fibonacci on all time frames. Sorry, I know we've only spent time together on the 4-hour time frame. This is all, I'm freestyling this, okay? This is all off the books. Just kind of showing you a little bit of the homework that I do and how I back test and stuff. Let me just scroll up just a little bit because you guys are really blowing up the chat. Is there a system to beat market manipulation? Yes, there is a lot of more. Jonathan asked, is there a system to beat market manipulation? Yes, there is. And there's a lot more to it than just Fibonacci or anything else that I've shown you today. That I only show for my private group, my private students, and everything like that. So actually, at the end of the presentation, I will drop my link for those of you who are not inside of IML already. You do have an opportunity to join me inside of IML, inside of Trade House, to be able to look at everything else that we do. All right. Forex.com, they're okay. Their max leverage is 1 to 50 because they're US regulated. Takes a lot of, what's it called? It takes a lot of margin to take trades versus higher leverage where it takes less margin. How do you manage the trades to avoid being hit or being taken out? Well, you place your stop at an area where if price hits that, your analysis would be wrong. So you want to limit how much you lose. That's why you always should look left, correct? You shouldn't always look left. You should always look left and right as well. Why would I look right, Mr. William? What's on the right side of the chart? You tell me. 23 and 32 area for continuation. I don't know about all that. I don't use any Fibonacci levels below 50%. So these are all my Fibonacci levels, and you can see that it goes from 0, and my first one is 50, and then 618, 786, and 88.6. I don't use anything under 50%. It's not a deep enough retracement for me. And plus, there's, like I said, there's other analysis too that are going to be on the deeper end of the chart of the range. Fibonacci is the truth. Yes, it is. Eyes wide open. All right. So Fibonacci tells when the market is going to potentially reverse in a way. It doesn't always happen. Sometimes you take levels and price keeps going against you. That's how it is. Guys, the key is it's not just Fibonacci. It's not just looking at a retracement and saying, all right, I'm going to do this. It's looking at a Fibonacci level in conjunction with something else. Just like I showed you how a new high or a new low is being created. and it hit a 50% or a Fibonacci level, sorry, then it's more than one analysis telling you the same thing. The magnet tool along, yes, I love the magnet tool because what that does is it snaps right to the price. So you guys have seen it where I'll just drag it close to the low or the high and it'll snap to it versus me trying to sit here and, you know, eyeball it and put it down and all that. Okay. TradingView has beautiful tools. I've been with them for over 3 years. I've seen them go from nothing to a top 2,000 website in the world. It's been awesome. And they still put out new stuff all the time. But yes, the weak magnet is going to snap it to the price. And it does that for everything else too, if you want to draw a line or whatever. I took EuroCAD and GBP off fib and closed out all in profits today. That's awesome. That is good. You only take trade out to 786. What about 50 and 618? Also with this, can you enter off lower time frame? Yes, you can take a trade off of whatever time frame you want. Okay, we'll just stay right here for an example. Say you have this Fibonacci right in here. All right, this is a big range. You can draw another Fibonacci from this low to this high and say, all right, I didn't get in at the big time frame 786, but I still want to get in for a long. So wait for a retracement lower. So now on this smaller range, price comes lower and you want to take that 61.8, then you can do that too. It just depends. It all depends on each setup and all that. This, I'm just eyeballing it because it just happens to be right here as I'm talking about it. Hold on, I gotta scroll back just a little bit. So your setup off the fib is to take the trade only when the lower high is taken out and it's at a key fib level. That is, Mrs. Julia, that is what I've been showing you today. It doesn't happen as often as you think, but it does happen. There are other tools like our institutional candles or certain highs and lows that we look for to get taken and things like that. And other tools that I can't tell you guys just yet. But once you do join Trade House and you join me, I will spend more than enough time doing presentations for you guys privately, and we can go on and get further into it. Thank you for sharing that great information. You're very welcome. Yes, US regulated Forex brokers are limited to 1 to 50. Looking to the right is what's happening now, but looking to the left also shows patterns and potential reversal. I don't look at market patterns like, I don't know, like triangles and crab patterns and butterflies and dinosaurs or whatever else. I don't look at any of that. William, what's on the right side of the chart? There's no candlesticks, but what's on the right side of the chart? When is your next IML TV session? Don't want to miss the extra nuggets. I actually did one this morning with Rock Coomer. It's recorded. It was this morning at like 1 a.m. Central. Thanks for the great info. You're very welcome. Lucky Star said price. Yes, that is what's on the right side of the chart. Price. Let me take everything away and go back to the beginning. The left side, obviously, price history. You guys know that. Easy. On the right side of the chart is our price levels. The very first webinar I did for you guys was on whole numbers, which was just horizontal support and resistance. Okay, that's all it is a horizontal line. They look just like this. Nothing fancy, nothing super sexy about it. That's what it looks like. Now, the more you draw on there, obviously the more cluttered it's going to be. But for those of you who missed out on that one, I like to use whole numbers that are evened out. So like in this example, we would have the 1.12, which is right there, 1.14, which is actually way up here, 1.10, which is down here, so we haven't gotten there yet. But you can go back into your charts and you can start to see that we do get price action that will react off of certain price levels. All right. But when you're looking at this, you have to look at other stuff as well, like Fibonacci and manipulation and a whole bunch of other stuff. Now, these are majors, right? Like 1.10, 1.12. I mean, these are a couple hundred pips apart. You do have smaller ones, which I really didn't go over last time. I did go over the middle one. So like in between, say 12 and 13, right? Like 13 would be one. And then in between that, between 12 and 13 is 1250. All right. So sometimes you do get reactions off of those. And then to go even smaller, I like to use 20 and 80. So like 20 and 80. So what that means is, let me just look at this. What we're doing, what I want you to pay attention to is just this right in here. All right, the price. 1280, 1250, 1220, and then 12. All right. And I know this is not going to make any type of sense at the moment, but if you go back into your charts, pull up the horizontal lines, all right, or what I like to do on TradingView, go to your chart settings, go to horizontal grid lines, and throw on a line like gray or black, but don't make it like distinctive because you're going to clutter your charts. But like this one, it's gray. So I don't know if you guys can see this or not, but there's a bunch of gray lines on this chart. Now, when you start to go down to the smaller time frames and you start to warp your chart a little bit, the more lines you'll get. But if you pay attention to the ones that I told you, 50, 80, 20, and the actual round number, you'll start to see certain phenomenons and things like that. I can't think of really any certain scenarios that I can think of. The 1050 was right here. So in between 10 and 11 is 1050. So we got a pretty decent reaction from that. Okay. That was, let me see. From 1050, if you took a trade just at the 1050, you got about 23 pips of drawdown, but it went as high as 194 pips higher. Okay. I'm not saying just to blindly take that, but that's just kind of an example. And here's that 1.14 I was mentioning. One of the issues that I see with a lot of traders is that you guys spend a lot of times on the smaller time frames. So like the 15-minute, the 5-minute, things like that. And so you're not going to see like the major price levels or major Fibonacci levels just looking at a very small amount of data. So hold on real quick. What was I saying? Smaller time frames. You're not going to see big time frame levels on small time frames. So guys, you have to go out to the 1 hour, 4 hour, and daily. All right. One of you guys said that you took GBP. So let me go over to that a little bit. I know we spent a lot of time on Euro today. Okay. Oops. All right. There really wasn't a scenario that, to me, that I would use the Fibonacci level on, but we do have a major low. And so in order of importance, right, like as we move left to right, here's our high. We get a Fibonacci retracement, it goes higher. Once it creates a new high, you have to draw a new fib because now you have a new range, okay? So we created a new high in here, and we get a retracement down to the 61.8 level, and it takes out, and this is ugly. I didn't take this setup, but there's kind of a low right in there. So that low did get taken, and it hit that 61.8 level and then jammed higher. And then it went even further today or the last couple days. With this new high in here, you draw a new fib, but we didn't get any retracement deeper. It just kept going. All right. So the only real one that would have worked is this one. All right. But again, not really super sexy. there is other things in this price action that would tell me to buy it. And I'll go further into that once you join my private group in the trade house. Let me catch up on the chat again. My dogs, if they continue to bark, they'll entertain you while I read this. The right side of the chart is price. Yes, it's all about price range. Do you have a set channel or time schedule with IML, or is there somewhere else we can catch your training? So, Lucky Star, whoever that is, I go on with Rock Coomer every Friday at 1 a.m. Central, 2 a.m. Eastern. It was not this week. I believe it was last week. I was on 2 days out of the week on Jordan's session. The sessions with Jordan and Zach. Zach was still on vacation, and so I filled in for Zach on those. I don't remember which day it was. It was either Tuesday and Wednesday or Wednesday and Thursday, something like that. I don't remember. And I was on with Rock on Friday, on the last 3 Fridays, excuse me. And I will actually be doing my own. I'll have one all to myself Monday morning at 2 a.m. EST. For some reason, Rock will not be available, and I will be covering for Rock Coomer. And that is when I will go deep into the sauce. So I hope that answers your question. Very powerful nuggets. Thank you, Grant. Where do you go setting and for the horizontal line? Oh, sorry, maybe I went a little bit too fast. So on TradingView, if you go up to the settings, right, the chart properties, under the appearance tab, you have horizontal grid lines, and you just click that. You can make it whatever color you want. Obviously, I like black and white or gray. I like to keep the lines gray and light because, you know, I don't want a whole bunch of charts. I don't like cluttered charts, in case you haven't noticed. I don't like messy. I like clean, okay? Unlike my room, I like my charts very clean, okay? And that's it. So, yeah, settings, appearance, horizontal grid lines. All right, let me go back to the chat for just a second. How do we join the private group trade house? And do you keep moving the fib to the next high? Yes, every time a new high or a new low is fib, once a new range is established, you have to draw a new Fibonacci, all right? Because it's a new range. You join the private group, the trade house, by joining IML, by joining somebody inside of the trade house. So you can join under me. There's a few other people that you can join under, but that is how you get in. All right. Let me see one thing real quick. Yeah. I don't think I would be buying GBP just because on the bigger time frame, we just keep making new lows. So that trade that I just showed you probably would have been, you know, something quick, like in and out. But you could do this. I think a lot of you guys do like the risk to reward stuff. I'm not sure. Hopefully you do. I'm going to do it anyway, whether you like it or not. All right, so 61.8 level, right? Say we just took the trade at the 61.8 or maybe slightly below because we expect that low to get taken. I don't know where you guys would put your stop. I don't know if you would aim for this low or this low over here. I don't know how you trade. Each one of you are probably different. Me personally, I'd probably put my stop right in here, just below the 786 or right at the 88.6 level. All right, and from here to here, let's see, that's a range of about 37 pips. So that's a little bit too large. My max is about 30. So I'd probably go about right there, okay? And I would target a new high, right? So this is the high that was established, and this was a new high that was created. So at my first take profit would be there, and that's about a 1 to 3.5. And holding on to the trade, if you were to target other highs, then this high was a 1 to 4, almost 5, and then this high over here was a risk to reward ratio of 1 to 6. okay? So if you risk 1% here, that's a 6% gain on the account. Or if you risk 2%, right, that's a 12% gain on the account, which is beautiful. And that's how you flip accounts. The account flipper, right? When placing stop loss, remember to factor in the spread also. Yes, that is something I have said time and time again to my people. Because what will happen is they'll place their, say they had a buy order right in here. And it's like, oh man, you know, I missed it by 2 pips. Right. Well, if you put it up 2 pips because of the spread, or 3 or 4, then you would have gotten in, right? So it's better to take 1 or 2 pips of drawdown and get in the trade than to not get in the trade at all. So yes, that was a great comment. Don't forget about the spread, especially when your range is low, like this range or a much smaller range. You don't want to forget about the spread. All right. So we've been going on for roughly an hour now, so we're pretty much coming to the close of tonight's session. We're still at about 100 participants, guys. So if you have any other questions relating to any pairs or any commodity or any stock, please drop the questions now, because we are going to get ready to close. Well, at least for me. I'll be able to hand it back to our host and go from there. So I'm just going to check the chat. I'm going to give you guys about a minute or two, throw in the last couple questions, and we'll go from there.
Let's get those questions, people.
Cody said, one of the GOATs. Thanks, John. You're welcome, Cody. What is your favorite pair? Well, we spent a lot of time on Euro today, so I'll let you try and figure that one out. Lucky star. It's majors. I like majors. LOL. GBP, Euro, NZD, and Aussie. Those are like my, I guess, my main 4. I like to look at those. Thanks for the great education. I learned something different from my normal trading. William, that's awesome. Follow John for more nuggets. Yes, please do that. And you can watch my story, because I post some pretty badass stuff. And my food, too. I go to my friend's house a lot, and they cook for me all the time. We play pool. They grill on the barbecue. It's an awesome time. So you get to see some of the food that I eat as well. Not that any of you care about it, but you'll see it. Can you go over where to place the fibs, please? Yeah, I'll do that one more time. I will do that one more time, Mr. Michael. Kathleen says, thank you so much, John. Please repeat your pairs again. I will go ahead and write it down for you, and then I'll go into the Fibonacci drawing one more time.
Awesome. Thank you.
And team, if you want to know his pairs, you can take a screenshot of his screen right now, and it'll give you a great idea of what it looks at.
Oh, I forgot one of them. One of them's not a pair. I'm not saying that these are the only ones that I trade. I do trade more, but I like to look at these. Dollar index, Euro, and GBP. You'll understand why these 3 are on the top. And then Aussie and NZD, and you'll understand why these 2 are on the bottom. We might have to save that for another webinar. John and I will both upload this recording over the weekend. I'm actually not recording, so that one's going to be up to you, Mr. Chase. I forgot to hit the record button at the beginning.
It's okay. This is Gigi. I got you.
Oh, hey, what up?
Yeah, I just got here to Atlanta with Steven Lindor and some other people on the team, but I got you. I'll make sure you get a copy for yourself.
Thank you. Thank you. Yeah, I saw you posted about an hour ago. I saw you driving in the car and all that stuff.
Yeah,
when I was putting my
you stepping up to the plate tonight and taking care of the ForexNChill followers, man.
You're very welcome.
Always bring the fire. Always bring the fire.
I try. Yeah, I was putting that PowerPoint together, and then I saw you going live, so I was looking at that for a second. Do I trade crypto? No, I don't. I have before. I did okay. It's just not my favorite. Crypto is wild. Crypto does run stops as well. I don't know. It's just, I can't. I have no room for it. Let me just show you my list real quick. This is what I look at. This is my currency list. It's missing a lot, but I can't even tell you how many. This is like 20. Look at all the lists I've got. I've got bonds. So I've got bonds, I've got dollar index. I have the bond yields. Okay. Under commodities, I have platinum, corn, soybeans, copper, crude oil, steel corporation. I've got a crude oil volatility index, gold and silver, natural gas. Under crypto, I have a few I don't really care about. Under the Dow Jones, I have the list of all 30 of the Dow Jones stocks. Under financials, I have an entire financial section, which is all financial stocks. Under futures, I also look at the S&P 500 futures, Dow Jones, Russell 2000, and the NASDAQ futures as well. Under stocks, I can't even tell you how many I have. There's so many all over the place. And then I have a utilities sector, all right, and the ETF for that one. And then same thing for technology, all right. So I have a massive, massive list, and it's not even done. So me trying to add more crypto, I can't keep up with it. I can't even keep up with everything I have now, to be honest. So.
Hey, I was like checking into the hotel when you first started. Did you give them some of your background that you started with stocks and migrated over to, I think, like indices and Forex?
I expected everyone to remember from last time.
You got some new people on tonight. But I have a quick question. I heard someone recently talking about emerging markets. Is that something you've looked into trading?
Emerging markets, I kind of know a little bit about emerging markets, but not enough to be able to like take a trade from that. That's probably bigger news. It's probably more fundamental related.
Yeah, I got the feeling it was all fundamentally driven. So it's just something I heard recently. I really haven't looked into it myself, but you know so much about all the different markets. I figured if I would shoot my shot and ask you.
I got you. I'll actually, you know what? That brings up a good point, and I'll end it with this. Let me just check the chat one more time. I know people are still talking. Just a country boy trading, LOL. All right. So just a little bit about me. I don't really like talking about myself a whole lot. You guys know that I'm really passionate about trading, and I'm not passionate about showing you and telling you who I am because it's really not that important. But because you asked, yes, I've been trading for 5.5 years. I started with stocks, okay, back in the beginning of 2014 when I first entered the Navy, all right? Spent 4 years in the Navy. And outside of my workday, I was avoiding going to parties and getting drunk. Well, I did that for a little bit. I won't lie to you. But after a little bit of that, you know, I put the bottle down and all that and started to really dive into trading. And that was literally the best decision I made in my entire life, other than giving my life to Jesus. All right. I'm also a trade house educator. I will have my own channel pretty soon. There are a ton of people who are begging for it. And one day IML will give me my own channel. And that is pretty much it. 25 years old. I'll be 26 here in December. All right. So I'll be 26. I'm getting older. I know a lot of you guys are in your 20s. Last time, I can't remember if it was on this one or a different webinar, I asked everybody to put in their age, and it was all like 20, 22, and I had like two 37-year-olds. It was pretty cool. But yeah, a lot of young people here. So with that being said, that is going to wrap it up for my lesson here for you today. You're 50. Wow, that is crazy. 1969. Well, you're like the same age as my mother. That's pretty cool. 46, you're 50, 76, 41, 59. Damn, I mean, sorry, a lot of you are over 40s and 50s. That's great, though. That's awesome. Probably going to, you know, teach your kids how to trade and stuff like that.
It's true. A lot of a lot of people here have family that they're looking out for, and their goal is not just to do it for themselves, but for the next generation and the generation after that.
Yeah.
You know, John, I'm blown away. I didn't know you were only 25. You are so knowledgeable. Oh my God.
Thank you so much. Yes.
I got
25.
I would have thought, you know, seriously, being serious with all the knowledge I've seen you drop here on Forex'nCchill and also on IML TV, I would have thought you have been in the market for a long time.
Oh, thank you.
Yeah, you got it together. Great.
Thank you very much. I appreciate that a lot. And I kind of think of it as I've been trading for 5.5 years, but I've got about 20 years worth of experience. And I only say that because I get a lot of questions like every day, but one of the main ones is how long have I been trading? Or no, sorry. Well, that's one of them. But another one, the one I'm trying to think of is how much time do you spend on charts every day? And the answer is an unhealthy amount. That's the answer. An unhealthy amount. Like you, okay, so a lot of you are in your 50s and 40s and stuff like that. So there's a ton of adults in the room. That's great. A lot of you have grandchildren, things like that. Navy wife, retired vet. Awesome. Lucky star. That's great. Where was I going with this? I can't remember.
Short time.
Oh, yeah. I spent a lot of time on charts. A lot of the adults in the room, I'm pretty sure, have seen a lot of the 20-year-olds, you know, spend a lot of time on the phone or spend a lot of time playing Xbox or watching TV. Take all of that, like what your children and grandchildren are doing, take all of that time and just apply that to charts. That's Jon Fibonacci, okay? An incredible amount of time, a disgusting amount of time. If I had to start over, if I went into a coma today, and I woke up a year from now and I forgot everything I knew about trading, but I told myself, hey, you know, it took this long and it took this amount of effort and this number of hours per day, I would not do it all over again. That's how much time I put in. I would not do this again. Teach your kids early what you learned late. Yep. Oh, sorry. I read that question like 3 times. When will you be taking over for Rock Coomer again? Monday. Monday morning at 2 a.m. Eastern. So Monday morning, 1 a.m. Central. I will be on. Hopefully. That'll actually be my very own first stream. I'm going to use OBS, and I really don't know how to use it. So if I can use it properly, yes, it'll be Monday. All right, guys, so we're now reaching a little over an hour. I feel like we've done enough for today. I'm pretty exhausted. It's been a long day. It's been a long week. So thank you all again for being here. My name is Jon Fibonacci. My Instagram is at Jon Fibonacci. And if you would like to join my trade house, my private group, students, whatever you want to call it, and you're not already inside of IML, you can send me a message on Instagram, or if you put, if you have me on Facebook or message me on Facebook, I will give you the link to sign up under myself, and we can get you on more webinars. We can get you learning all the sauce, and I will spill everything that I know about the markets into your lap. And that is it. All right, guys, thank you so much for being here. I will talk to you soon.
Thank you enough.
Thank you, John. That was a fantastic session, and everyone here really, really appreciates you, myself and Gigi as well. It's always a treat, and we hope to have you back soon. And team, if we have a lot of new people here that aren't on IML, by all means, do what he says. Go to visit him on Facebook or Instagram. Hit him up in his DMs, and he'll be happy to help you. All right, thank you again, John. Have a good night. Have a great weekend.
Thank you all. I'll see y'all soon.
Good night.
Thank you.
Who was the person that was saying this to her? Like the principal or something?
And she made it to